Great. Okay, we're going to go forward now for a discussion on shipping crystal ball for 2021 and the kind of macro issues affecting shipping. Just before I do that, one or two pointers. You may wish to ask a question during the session. To do that, you can click on the little red arrow at the top of the top right-hand side of your screen, which will open the info bar, and you can write a question down at the bottom. You may also be interested in our handouts. We have a couple of handouts for Marine Money and a couple of handouts from Vessels Value, one of which is an infographic of the United Arab Emirates fleet, which is extremely interesting. With that, I'll hand over to Andrew Baird, who's going to moderate the session. Andrew is managing partner of the Dubai office of Watson, Farley and Williams. Andrew, over to you, please.
Thank you, Kevin, and good afternoon to everyone, or good morning or good evening, depending on which part of the world you're tuning in from. I should start off by introducing the panelists today, and I'll do them from left to right as they appear on my screen. So we have Richard Greiner, who is a partner at BDO and has been advising on shipping and offshore maritime related matters for some 30 years, so is an industry lifer. Similarly, Knut Mathiassen, who is MD, Managing Director at Ince Consulting in Dubai, has moved over to a consulting role after, oh gosh, more than 20 years experience as a banker. And I still have fond memories of my first deal with Knut back in 1989, I think it was. And then last but not least, we have Chris Peters, who is the CEO of Eships in the UAE. And thank you, Ashwin, for giving us a sort of quite useful seg into this section of this session. And really, we wanted to sort of start off by picking up on the developments in new, when I say new fuel technologies. Obviously, perhaps the most prevalent is LNG, and that's obviously not a new fuel concept in that we've had LNG-powered vessels for some considerable time. But we've obviously seen the technology refined and improved, and now, of course, we have a lot of interest in hybrid and dual fuel systems as the technology has been refined. But we've also, as Ashwin mentioned, seen a lot of interest more recently in ammonia and hydrogen power ships, as well as electric power ships. And really, this is really a question, I think, for Chris to start off with. Really to ask you to what extent you think this is all viable technology from a cost and operational perspective. I've got a couple of follow-on questions after that, but really interested in your views on what the position is both today and in the future, getting your crystal ball out for these for new types of fuel.
Yeah, unfortunately, I don't have a crystal ball, but I've been on various seminars recently, and I'm not a technical person myself, but the new fuels that we're talking about, I think they're available for shorter and coastal vessels already, and we're seeing a lot of development in the motor industry where some of these fuels have been utilised. But when it comes to deep sea ocean-going vessels, the general consensus from what I've been looking at is that this technology is still at least 1 to 2 decades away. And I think that's where the interest in LNG is coming from, is that LNG, although not carbon neutral, it is the cleanest of what is available currently. And I think that that's where the interest in LNG comes from. We're seeing that there's an increase in LNG bunkering vessels that are on order. But again, there's mixed opinions about this, and it's something that I've spoken about in the past. That once we had IMO 2020 with the low sulfur, the next thing that will get flagged up is whether LNG is actually clean or not. And it's already started coming out in the press that the slippage in LNG-powered vessels actually releases more carbon than conventional fuel if you don't get it right. There's no sulfur, but the CO2 emissions, if the slippage is incorrectly managed, is actually worse than burning conventional fuel. So in answer to your question, I think that the technology needs to be advanced. And again, if we talk about something that has gone off the agenda, which was scrubbers, fully 2-3 years ago, I said that I never believed in scrubbers, and my principal reason wasn't the economics. I just felt that having 60,000 mini scrubbers floating on the oceans was not the best way to go. It should have been done at the refinery stage. Then I think that if we want to get to a more carbon neutral industry, then it has to be governments and the big oil majors who actually start looking at the investment into these alternative technologies. Simply passing regulations that are passed on to the ship owner and saying you have to become carbon neutral by 2030 or 2050 without actually giving you the technology and the ability to do it is not really a way forward, in my opinion.
So, and it sounds to me though, Chris, as they really, the push would come from, well, obviously an investment in the technology, but also pressure from the end users, from the charterers, in relation to tradability of those vessels. And I don't know if anybody else, if any of our other panelists have a sort of view on that. That's the first thing. And the second thing is, presumably the result of that would be more accelerated scrapping.
Well, scrapping.
I don't know if Knut originally. Go ahead, Chris.
I think scrapping, I mean, again, it depends on the vessel type. And we're seeing now that the order book in many segments is actually down. I think that's a COVID issue and also a money supply issue, where there's been a lack of resources to come into the industry. So scrapping may not be as increased unless it is for green reasons. I don't know if Knut, you're seeing a different thing on the finance side.
Yeah, well, the demand for green funding, shall we say, is something we didn't talk about at all a couple of years ago, but it's very much at the forefront certainly in Scandinavia and Europe, less so in the Middle East, I feel. I was lucky to spend a lot of time with Wärtsilä last year and involved in certain innovations on green shipping, hybrid engines and new technologies, how we said, to reduce emissions. And part of that, the other side of that coin was sourcing finance. And we have one case we're advising on now, which is more the coastal shipping that you mentioned earlier, Chris, where hybrid engines certainly are here to stay. And depending on the amount of batteries or fuel cells you put on board, you secure valuable subsidies from governments, such as Norway and so on, which is very helpful to funding a new project. And green bonds as a substitute for equity, shall we say, we saw a few examples of last year, notably the very successful TK shuttle tanker project, where green bonds on delivery refinanced the part of the equity that TK put in. And these are very interesting new developments where green funds. And during Wärtsilä time, I also visited IFC, for example, who are allocating capital to support, green shipping, much more than before, and have very specific targets to achieve. Very focused on Southeast Asia, in fact. So this is definitely here to stay. And one thing I've learned is that you definitely don't want to commit to the wrong fuel when you now place your new buildings, because after 10 years, you don't want to be sitting with a vessel that is not fuel ready for, say, ammonia, and the impact that may have on the second-hand value of that vessel and your investment.
Of course, we went through all of this with scrubbers, and everyone was told that they had to fit scrubbers, otherwise they wouldn't be able to trade their vessels, or they would be, that their tradability would be diminished. And I'm always skeptical of anybody telling me or anybody saying what should and shouldn't be fitted to a ship 10 years in advance. I think it's a very difficult bet, particularly if you've got several different choices. So it's a bit of a Hobson's choice for a ship owner at this stage ordering a new vessel, I'd suggest. We were going to sort of pick up on the sort of what we sometimes refer to as the greening of the shipping industry, which just seemed to me to be moving, well, hitherto at a sort of glacial speed, I think. But I was just totting up the sort of the various things that banks are looking at the moment, and we have the Equator Principles, which is obviously a broader set of guidelines, and more specifically for the shipping industry, we have the Poseidon Principles, to which 18 or so banks have signed up to. And then we have the LMA Green Loan Principles, the Sustainability Loan Principles, and so on. And on top of all of that, we then have the Climate Bonds Initiative that sits on top of it. So I'm intrigued because the shipping bonds that I've seen that are green bonds have related to things like shuttle tankers, which seems to me to be a rather odd subject for a green bond. I don't know if anyone has a view on that, but it does seem to be perhaps pushing the envelope slightly.
Well, that specific shuttle tanker project did have its challenges in selling those bonds, but eventually they did get placed for exactly the reason you mentioned, Andrew. The association with transport of crude oil. But the features of this project was very. It ticked many boxes for those investors that eventually came into the project, and I think it was deemed to be a success in the end. But it's not given that, you know, green bonds are there to be tapped into by anybody. It's a lengthy process in certifying the emission reductions and so on, and it has to be from independent sources. And if you're going out and listing a public bond, all this has to be absolutely right.
Yeah, maybe there's a different sort of, maybe there's different shades of green in there somewhere as well, I think. I mean, obviously on that one we're talking about, we have, it is an LNG propulsion system, but it does seem to be, yeah, it did raise a few eyebrows, I think. We shan't name names, I'm sure everyone knows who we're talking about.
Andrew, could I come in on that? I mean,
yeah, sure.
I think what's very important, sort of going back to the slightly earlier piece of the conversation as well, is the need for an orderly transition more than anything else. And I think you can see there is initiative, if you like, in the green sense, for improving the energy efficiency of existing tonnage on the water. So we're not just talking about things that are related to new builds to come, but you've also got well-publicized initiatives around improving the energy efficiency of existing tonnage, and that involves investment as well. So there is a business proposition that can be put together in that space, and those things are happening. I think also it is important to have clarity in the regulatory space, and one hopes with what the IMO is undertaking at the moment that will provide the clarity that the industry needs. But I think, as I've said a number of times over the last few years, the need is to move with some speed to get that in place. And one hopes that there's an understanding at the IMO end of the telescope that that's what's required. Because then,
yeah, although we've seen
better clarity of what the future's like.
Yeah, I was just going to just if I can cut in for 1 second, Rich. We've kind of seen that with this new Arctic initiative, and I know that that's several thousand miles away from where we're sitting at the moment. Well, I think, Richard, you're probably slightly nearer. There's been a great opportunity with the initiative in relation to heavy fuel oil use in the Arctic. And of course, it's hit the mainstream media big time, and has widely been portrayed as a bit of a sellout by the IMO, which is probably not quite what they were expecting. But it did seem, the indication was that 75% of trade would carry on as per normal. But Richard, you're better with numbers than I am. I don't know if that's what you heard, but that's certainly the coverage I saw yesterday. But,
I don't know.
Maybe an opportunity missed.
Yeah.
I just wanted to move on slightly, and again, Richard, this is perhaps also more into your territory, and we don't want to sort of encroach too much into the next session, but I did want to touch on the sort of wider environmental, social, and governance issues, which, as I say, I know are going to come up in the next session. But I think it's quite useful to get a view from the accounting profession in particular on how ship owners are reacting to dealing with the sort of criteria that you'd need to comply with in order to meet certain ESG targets, and their ability to sort of live with accountability and reporting around all of that, and how the auditors can actually assist with that process. Because obviously it's not something, it seems to fall outside the remit of class. Is this something that could or should sit with the auditors, perhaps?
Yeah, thank you, Andrew. And of course, the ESG topic is huge and certainly is going to be on the next panel. So we don't want to sort of dwell on it for too long. Clearly, this is not just an agenda item for shipping. It's a much wider agenda item, and there are a lot of stakeholders involved. There is a lot of different material out there concerning what you're meant to do, and I think the multiplicity of frameworks doesn't help overall, but it is a fast moving landscape. For example, in the UK public reporting space, there's a lot of focus now on the Task Force on Climate Related Financial Disclosure, the TCFD, and that is going to be promoted not just for shipping but more generally. And you know that in accounting, the sort of lead standards, IFRS, are set by the International Accounting Standards Board. There's discussion actively ongoing about creating a sustainability standards board, because I think that would be extremely helpful for companies, shipping companies, but all stakeholders, if there is a codification, because then there is a clarity for the company as to what measures it needs to capture and to report, and a methodology for doing it. And then following on from that, there can be an audit of those disclosures. So this is a very fast moving landscape. And
who would lead that, Richard? Would that be the World Bank, or would it be?
Well, as I said, that's coming from the IASB is actually putting that forward at the present time, which it wouldn't be accounting. It's going to be a separate conceptual framework, but I think that is very, very important. And as is always the case, it is even the case now. The auditor, the financial auditor, has to look at more than the numbers. They also have to consider all aspects of public reporting, but where there's a need for technical expertise to validate what a company is asserting, because it's the same principle as you get with financial reporting. It's the company that has to capture the information and report it, and an independent party then has to validate that, to audit it, if you like. But the auditor would need to make sure they had the sufficient skill sets within their organization to deliver on that. And that could either be by having experts in-house or conceivably working with an independent expert who is at arm's length to the company. So that's where that is heading. And if you look
That's
at,
interesting.
I saw some data that had been pulled together by Clarkson's about disclosure in the environmental space of public shipping companies. And I think of their sample, about a third had, and this would be lagging because it's probably based on 2019 year end. I think about a third of them had at least one environmental measure in their financial reporting, but clearly that's going to increase going forwards.
I mean, if I can come in on this as, I mean, as Eships, we're obviously the shipping arm of the TriStar Group, which is obviously an oil logistics group. And in addition to our normal annual report, for more than a decade now, we've actually been producing at the same time our sustainability report. And it's ingrained into our mission and vision statements that we're there to sort of give back. And we put everything out there that we're doing from a sustainability, things that we're doing to try and reduce our carbon footprint. And I think this is, again, if we go back to the financing side, it links in, I believe, that the Poseidon principal banks, the 18 of them, they should be coming out shortly with their first annual report of what they've actually done. I think that's, I don't know if
which will be interesting reading.
Well, it'd be interesting to see, because everyone's heard about Poseidon principles, but actually I haven't met a single ship owner that's borrowed on it. Maybe I just haven't met the right ones, or I'm in the wrong region. I don't know.
That's interesting. That is interesting. But of course, not all shipping companies. Yeah. So I was going to say, not all shipping companies operate on the same metric as Eships does. And obviously, what Richard is talking about is applicable to those who publish accounts or who are listed entities. What's really for the private shipping companies out there, and shipping is a very private industry, what are the incentives for people to go down the route of becoming greener and engaging in sort of better ESG behavior? Maybe, Knut, this is a question for you. Maybe it's a question of what are the banks doing about it, other than the Poseidon principles, which are kind of quite limited to the sort of green side of things. I mean, do you see that the banks have a role to play in this?
Oh, definitely. And again, certainly in geographically in Europe and Scandinavia, where banks are very selective in the projects they support going forward, as I see it. And we have seen a few examples of this in this region also with Oman Shipping, for example, obtaining quite favorable financing based on emission reduction targets and so on, ESG. So, but banks are also, I feel, a bit guilty of jumping on a bandwagon called green shipping and having targets for the lending that, you know, proportions should be green shipping and so on, without really caring for it sufficiently.
Maybe we should put this out as the first question for the next panel. So I don't know if Tien's watching already as the moderator, then maybe the bankers on the next panel can answer this.
I think it's also other stakeholders. I think that, Andrew, to your point, it's not just banks. It's all stakeholders in the industry are seeking to align their business with the ESG agenda. And we also had last month the launch of the Sea Cargo Charter, which is looking at from the ship operator's perspective and looking at the environmental energy performance of the fleet that they are chartering. So this process is not just one that applies to the public company space. It will apply across all businesses. And if you think about insurers, for example, the same point. So I think that's why I think it's very important to have clarity across the whole industry space. You don't want fragmentation in something like this. You want a clarity across the whole industry that all ships can follow and apply. I mean that there is always I think a view certainly about confidentiality, so one has to sort of make sure things are done in an appropriately confidential way as well. But if you think about it, maybe analogous to financial reporting, as an example, something like ship operating expenses, which you know is a subject close to my heart. When you look in public company disclosure, the best you're going to find, most likely, is a blended average daily rate across the fleet or something like that. That's all you're going to see. Whereas to really understand the performance, you need to see a vessel by vessel breakdown across the main cost categories. So I think the key will be, you have to keep the information at a more granular level, but in terms of what is available for public consumption, it will be somewhere towards the top of the pyramid, if that makes any sense. And that's what will be happening. So you've got to be,
the tip of the iceberg, Richard.
Yeah. No, and if that does that make sense? The analogy with something like ship operating costs, you don't show everybody everything, if you like. You have it, but it's not for public. It's not readily available for public consumption.
And yeah, maybe that does take us back. Maybe that does take us back to the fact that it could be policed or graded by the auditors, perhaps. Maybe that's a new role for the audit companies.
Yeah. As I said, working with appropriate technical expertise as well.
I wanted to just I wanted to spend a little bit of time, and it's sort of linked to some of what we've been talking about in relation to green bonds and so on. But I really wanted to talk a little bit more about, and this is again yet more crystal ball gazing, and around the availability of funding as we see it going forward. And obviously, there's been we've had a bit of a seismic shock with COVID, and we were already in a position where certain sectors of the market were not looking particularly hale and hearty at that stage. And of course, it's also impacted on the number of banks who are still out there lending in the market. And certainly regionally, I think it's fair to say that the majority of the banks in the region are only prepared to look at certain credits now, and effectively for halo customers, if even for them, and that there's very little capital available on the banking side in the region available for shipping, and that's come about at the same time as we've seen something of a contraction amongst some of the international banks, and we've had a number of banks that have retreated, some of them back into Europe, closing down their sort of more global operations, and some of them shutting up shop altogether. And obviously that's, some of those portfolios have found homes with private equity houses, and some of them with other banks, but there's certainly been a real contraction in the number of institutions that one can go to for financing. And do we think that's a trend that's going to continue over the next 2 or 5 years? And if it does, where are we going to find the money from to finance the ships? I'll open that to everybody, really. Although you may want to, or Chris, you may want to have a go at that first. I don't know, but
my crystal ball for next year is so clouded by restructurings. It's really hard to see where, certainly for next year or first half of next year, for any good shipping project. In this region, it's pretty hard to see where that money is going to come from. There are sources of finance, alternative lenders out there, of course. There always will be, but they're getting expensive. We're looking at leasing companies from Taiwan, you know, the new players and so on. But the banks in this region are pretty locked down, I think.
Yeah, I mean, we've seen, I mean, there's a lot of consolidation happening in this region. A lot of the banks have been merging, and the local banks are not really there anymore for what you would call traditional shipping project finance. They are there for corporate, they're there for government, and if you're borrowing at a corporate level, I think they're there, but traditional shipping, it's not here anymore. There are a few of the international banks that are present.
So will that force consolidation and lead people more into the sort of into the public markets?
I think it has to.
Yeah. And so, and maybe that in conjunction with the downturn and COVID, maybe it becomes a bit of a, in current terms, a bit of a sort of survival of the fittest moment.
Yeah, and we're probably encroaching into the next panel because I've actually received a message from TN telling us that we are. But so we should probably move on to a different topic, as we're actually taking the subject from the next panel. But I mean, if I give my 2 pennies worth on, I mean, if we talk about the leasing houses in the Far East, some of those who have done leverages for companies at 90, 100%, unless those companies bank their money in Q2 when the markets were good, then I think that that excess cash that was paid out in dividend, then you might find there's a few problems coming home to roost very soon. Yeah, and you might find that the leasing companies are not there either anymore.
No, and of course they have themselves have been beset by some difficult defaults as well, and some quite large defaults, it's been quite difficult restructuring those particular in those particular circumstances. The other factor, I think, that we certainly see potentially driving a future change, certainly in terms of pricing for sure, but also potentially availability, is going to be the sort of the inevitable tightening up of capital adequacy rules, and again, we don't really know what the next Basel rules are going to be, and we've been talking about them for a long time, and I don't know if anybody's crystal ball is any clearer than mine is on that, but that does seem to me to be another factor that is potentially going to lead away from the traditional banks and more into non-regulated lenders, which inevitably leads to pricing increase. I don't know if anyone's seeing any signs of that at all.
No, I mean,
Richard, I don't know if you have a view on the regulatory piece on that.
It's not really my bag, Andrew. No, but I mean,
I wasn't going to ambush you.
No, all I would say is I think it moves. You know, it moves for all, if you like. When it moves, it applies to all. So it's a market.
We're all in the same boat at that point.
Yeah.
Using the pun.
I've said over the years, the cost of debt hasn't changed since pre-2008. LIBOR's gone up and down, and margins have done the opposite at the same time. I mean, right now we've got near zero LIBOR, and we've got higher margins. In 2007, pre-2008 crash, you had 5% LIBOR, and you had margins sub 1%. So I think for those of us that can still raise finance, the cost of debt is basically the same. It's just the portion of LIBOR and margin has changed.
Yeah.
soon to be
I
suffering.
think that's certainly what we see as well, actually, Chris. I agree that all in, it all looks as though everyone's roughly in the same position as they were. It's just made up of different constituent parts. Now, I see we've been photobombed by Kevin, which I think means that we've got some questions.
Yep, a couple of questions and also not much time left. So one of the questions is, shipping is clearly a long-term business. I mean, shipping assets may have a lifetime of, I don't know, 20 years. Shipping finance, maybe 5 to 7 years tenor and longer than that profile. So the question is, how do owners and financiers take a view on investments and financings on a longer-term basis when there are so many uncertainties in the shorter term, like fuels regulation, COVID, and the rebound recovery, and all this kind of stuff? So, you know, how does the kind of the investment decision sort of balance the long-term investment and the short-term challenges, Chris?
Well, we've taken delivery of 4 new build vessels this year so far, with 2 more to come in January, and that was a long-term investment. We have good counterparties, we've got good support from our bankers, and we've basically done a long-term deal both on the chartering side and on the financing. So I think they're all the new, they're not LNG fueled vessels, but they are the new tier 3 top eco, as green as you can get, still using conventional.
Mm-hmm. And when did you put that deal together?
Contracts were all signed in December 2018, and then the vessels were delivered.
18. Okay. So if you hadn't done it then, and let's assume that you were thinking of doing that now, would anything have changed?
Well, at the time we were looking at LNG powered for these vessels, but the cost of those vessels was about $5 million per vessel more. Mm-hmm. And that's an investment which wouldn't pay at the time. Now, whether obviously Poseidon principles weren't there then, maybe if there's funding, anyone who can come up with a green economic solution is going to make a lot of money. But again, is LNG the correct fuel?
Exactly. And Knut, from a financing point of view, when banks look at kind of long-term projects involving new buildings, or they're giving finance for modern vessels, which may be 5 to 7 year tenor or beyond, I mean, how do they sort of, you know, take into account the kind of the longer-term financing against the shorter-term challenges?
Well, I think for new buildings today, we have the latest green technology, shall we say, which makes the ship more expensive. And let's not forget, this has to be looked at as an investment by the ship owner. The extra, say, 20% you pay for all the green features, you would expect will prolong the life of the ship potentially, but also the available tenors from the banks in terms of risk profile, shall we say, so that you push beyond the 12-year standard, you know, risk profile a bank will apply to something above 15 or maybe 18 years, and that makes a big difference for ship owners in terms of their break-even rates, and you know, will underpin the long-term nature of the investment. But it is something that banks are grappling with a bit, and you know, it's much more convenient to have a steeper repayment profile than sit with an exposure in something that, in a technology that after 10 years might be too old. Hence, the second value of the ship and the security would come in lower than expected, and risk increases.
Mm-hmm. Okay, thank you. Another question is, are companies, both banks and shipping companies and advisory companies, Richard, perhaps like yourselves, are you having to employ new people with new skill sets in order to sort of handle the issues around, you know, the propulsion, the regulation, and so on and so forth, which is now affecting shipping? I mean, Chris, maybe from the point of view of a shipping company, are you having to take new people on board to sort of delve into all these issues?
Well, we've been expanding anyway as a company in terms of assets and people. So yes, I mean, we are employing additional people, but again, the majority of people we employ are ex-seafarers. They're coming from the industry with the knowledge that's required. So I wouldn't say specifically for the new regulations, because we all keep up to date.
Okay. What about you, Richard? I mean, is your firm having to take on new people with new skill sets?
Yeah, absolutely. I think I alluded to that earlier when we were talking about the ESG agenda and, you know, the role that an advisory business plays in that. So, you know, that there is a constant need to refresh the skill sets, and part of that is the changing landscape. There's no doubt about that, and that will continue. It's also fascinating for us. We did quite a lot virtually anyway in an advisory space, but now for the last 9 months we've been delivering pretty much 100% of that. So, and that itself is a different challenge, and it requires different skill sets on an ongoing basis, but I think is very much part of the future as well.
Okay. Okay, let's just go across the board, including you, Andrew. I mean, you know, the topic here is shipping crystal ball for 2021. Are we generally pretty positive about 21? The vaccine will roll out, demand will come back, things to a degree at least will get back to normal. 1 minute each, Andrew.
Yeah, certainly. I think what we've seen is that there was a bit of a hole, particularly over the summer, where people were really not doing transactions. I think we've seen since the end of the summer quite a big uptick in transactional work. There's always going to be the restructuring work out there, which I'm afraid for some of us is good news, but not good news for well, maybe it is good news for the industry, because as we said, it weeds out some of the weaker people, perhaps. It's hard to think of a worse possible year than 2020. I'm an eternal optimist. So I think things will definitely get better in 2021 for sure.
Okay, thank you. Knut, what do you think?
Well, you mentioned restructuring, Andrew, and that's my main activity now, whether I like it or not. That's where the clients requires assistance certainly on the offshore side, and that's set to continue for all of next year, I think. Okay, Chris, 2021 going to be a good year for you?
I hope so. No, I think it depends on the segment. I mean, this year tankers was strong in the first half and now weaker. Dry bulk was weak, and now we're seeing signs. And I think from Ashwin's earlier presentation, okay, we don't do containers, but the next best segment he had there was dry bulk, and we see that picking up. So we are fairly optimistic. I'm always optimistic, but as a company, I think we're fairly optimistic for the next 12 months. But I think that the real recovery will be the following year.
Okay, perfect. And Richard, I mean, apart from everything else we've discussed, we've got Brexit coming up in the UK. So, I mean, what about 2021 for you?
Yeah, I think in the shipping sense, Brexit in most spaces isn't a major agenda item, frankly. I mean, it's going to happen come 2300 on the 31st of December is when we're exiting. So it is an event within the financial reporting year for those that have a December year end. I think the good thing is that we didn't know about COVID a year ago. We know about it now. In another year's time, I think it will be behind us. For financial reporting, companies and advisors had to scramble around to deal with it at the time it arrived. Now we know what we're doing. I think modeling is key to that, as it was, I didn't get the opportunity to say in response to the other question you had earlier. A good financial model can cope with all these variable inputs that we're speaking about. And I think ESG will remain foursquare on the agenda for 2021 and beyond.
Okay, perfect. So that brings us to the end of session 2 of our annual Marine Money Virtual Gulf Ship Finance Forum. Thank you very much to Andrew, Chris, Knut, Richard, and Ashwin earlier on. We will re-record Ashwin's panel to iron out the session to iron out the technical issues, and we'll post the whole thing online on our website, probably either today or tomorrow, and you can listen in again or listen to it for the first time. Thank you very much for joining us. We'll be back in 1 hour for our third session, which is all about financing in the Gulf region and beyond. So for now, thank you and goodbye. Thank you.